Welcome back. Now, almost after a year after the infamous Marikana massacre, South Africa's labour market continues to be unstable and any recognisable state of peace seems to be in the very distant future. To give us an update on the state of wage negotiations in affected sectors is Tony Healy. Tony is a labour analyst at Tony Healy and Associates. Tony, thank you so much for making the time to join us. Now, the BRICS Business Council has just concluded their inaugural meeting today. And one of the issues that was right at the top of the agenda was the labour instability in South Africa. But on the other hand, Tony, you also have dissenting voices that say actually investors don't care about the instability in the country. They really want to know whether they're going to make a return on their investment. In your view, is South Africa's reputation as a conducive investment environment taking a knock, or is that sentiment really not that important right now?
Well, I have interaction with investment houses from time to time, and they certainly convey to me that it's a very important factor. You know, investors will require and want to see stability, and when they see excessive industrial action, when they see prolonged industrial action, when they see violent industrial action, they become nervous, understandably. So it does, as far as I'm hearing, impact quite significantly on investment decisions.
And there seems to be quite a number of sectors at the moment that are in the wage negotiation phase. And as early as this morning, we heard that the auto sector had gone to strike. Can you give us a little bit of insight about the nuts and bolts of that dissent that we're seeing in the automotive industry?
Well, the dispute is 2 days old in terms of the industrial action. We have NUMSA, the union, demanding 14%, and the employers, the 7 motor manufacturers, offering between 7.5% and 8.5%. So there is publicly a big divide between the two. Behind the scenes, it's probably a little closer than that. But it's an important industry. It accounts for 6–7% of GDP, 12% of exports. It's an anchor industry in the Eastern Cape. So it has to be a cause for great concern. It also is an employer of approximately 40,000 individuals.
So we're unlikely, are we likely or unlikely to see that particular tension come to an end? If one takes into consideration the fact that in Mercedes-Benz South Africa's history of 25 years of being in the country, this is only the second time they've ever had a strike. And it seems as if, is it a question of them giving in to worker demands in the past, or are we seeing a different dynamic playing itself out now?
Well, I think there's the pressure on costs, and we see that not just in the motor industry, but in other industries as well. It is already a fairly high-paying sector if you look across sectors. So, you know, amongst its peers, it is a relatively highly paying sector. But of course, you know, the inflation and the impact that has on workers is going to pressurize their mandate. I think importantly as well, we must remember that NUMSA is now the biggest single union in COSATU, and they are concerned, they're undoubtedly concerned that they don't become, if you like, AMCU'd themselves as their colleagues at NUM were 12 months ago.
Let's quickly jump to gold. We seem to be headed for a deadlock in that particular dispute, with the employers only, ceding 1% towards employees. Are we likely to see that come to an end anytime soon? Well,
I think, look, all strikes come to an end. And it's difficult to forecast, but the gold sector is under extreme pressure. And some, for example, Sibanye Gold have come out and said, we're not going to pay more than CPI, and I tend to believe that they mean that. So the mining sector in general, gold in particular, is in a very difficult place. Will we see a prolonged strike? Potentially, but of course one has to also factor in the strike fatigue factor, because employees can't stay out on strike indefinitely.
The platinum season for negotiation is coming up shortly. Should we expect that a similar trend in terms of really high demands from the side of the employees and met with very, very on the opposite end of the spectrum givens by employers? Is that what we're headed for as well?
Yes, indeed. And I think particularly in the platinum sector, where AMCU is so dominant, they are by their very nature a contrarian union. They want to deliver on promises. Those promises and expectations might be a little unrealistic, but they've shown that they're willing to pursue industrial action to meet their ends. But again, I think the mining companies themselves are going to come in at modest levels, and my guess is that we'll probably see settlements in the 7 to 8% vicinity.
Of course, we've had the government pulling together its various departments that are embroiled in these particular disputes, and next week I think they are hosting the mining Lekgotla. Is this not a little bit too late?
Well, I think that happens at a macro level. I think as is the peace accord type of initiative. But once you get down across the table and you're talking rands and cents and benefits and what have you, those kinds of initiatives unfortunately don't have a lot of influence that they can bring to bear on the process.
Very quickly, in your view, Tony, are we seeing a new landscape in terms of the labour market in South Africa?
I think so, and I think we're seeing a recurrence of what we had a couple of decades ago, where social or economic issues are starting to be acted out in our workplaces. So issues around non-delivery, perceptions of corruption, non-attention to grassroots issues, all become factors which influence the behaviour of strikers.
Tony, thank you so much for making the time to join us. Of course, that was Tony Healy. He is a labour analyst at Tony Healy and Associates. Now, PricewaterhouseCoopers' 16th annual Global CEO Survey found that attracting and retaining talent is still high on the CEO's business agenda. With executive remuneration being scrutinized from all angles, CEOs concur that existing pay-for-performance models are just not working. Joining me now is Gerald Seegers. He is a Director for Human Resource Services at PwC Southern Africa, and he's here to unpack this year's Executive Director's remuneration practices and trends report. Gerard, thank you so much for making the time to join us. Now, if we look at the fact that this is your 5th edition of releasing this particular report, are there any major trends that you can point out that apply not only to South Africa, but if there are trends that apply to Africa as well?
Yeah, look, I think this report especially is almost a textbook version of it. I think there have been so many issues, some that we've already alluded to around wage negotiations and the gap. I think more important for us was just to have a look at the focus has been in the last, ever since the financial crisis, around executive remuneration. So we have watched that trend going up, and it has been increasingly going up at a fair and at a steady percentage. And this year's report for us was the most critical, where we said, look, well, what came out in terms of the last reporting period. Fortunately, overall, from an executives level, that came out at just over 4%. So the trend was now reversing. It was changing. Okay, is it enough? Honestly, I don't think so, and I think we're now looking at another period that we're going to go forward. Our increases at executive level, 4% or 6%, which is what is now proposed. Should that actually be 0?
Right. We've seen some interesting things in the media. I mean, I think last week we had one of the executives at Transnet saying that he's going to take a 42% cut because they hadn't met the targets that they had forecast for the year. Now, is this a once-off surprise story that we'll all see, or is it likely to become a sustained trend?
Well, I think that you've just hit it on. What we want to see is sustainable changes and changes in the structure of round remuneration. So it's good that we're seeing a lot of executives in South Africa heeding the call of some restraint, because remember, we don't want any regulatory intervention at this stage. So we've seen many of our clients saying, look, we're no longer going to take increases, or they're waiving their bonuses, etc. Those are all very short-term fixes, but at least they are the right actions at this point in time. There are far more structural and important structural changes that need to be made.
Gerard, of course, there's always that contentious issue of the pay gap between the executives and, if I may call, ordinary staff. Now, whose responsibility is it to ensure that we are continuously bridging that gap, and should we be bridging that gap?
Well, that's a good, because I think pay gap is, and almost I like to refer to rather as the inequity or the internal equity gap, because I think that's exactly what it is. It is an internal measure, not an external measure. And too often we externalize it in terms of we start benchmarking it, and that's quite fatal because there's no trends or anything around that. So just as your previous guest was talking about, I think this is what we're starting to see. It's the social and sort of economic issues that are starting to come to bear now.
Right.
And it's not always the executive pay that is the problem. It's, whilst we measure the gap and we want to make sure that gap doesn't widen, we're looking at what are the real causes here. And it's quite interesting when you start unpacking that. when you find maybe it's poor service delivery or just poor working conditions, etc.
What does the model look like that we ideally should be moving towards? I mean, if we look at incentives versus basic pay, which one should have the higher weightage?
Well, it's interesting because up until now, particularly in South Africa, we've had a sort of a one-third split. In our global CEO survey and in the incentives survey, we've seen executives are looking for much more certainty, less volatility. So we're seeing a higher sort of base pay, if you like, still with some incentives, but those incentives are really now measured, if you like, on the way in and not based on the way going forward.
Right.
And that's an important structural changes. But definitely the trend is moving almost, I'd say, 60-40 now, not one-third.
Of course, it's always interesting to find out how South African executives compare to the rest of the continent. So, Gerard, are you overpaid or are you in line with the African?
No, I'm underpaid, definitely. But I think if we take out, if I just look at a CEO, because he sort of sets the trend, in the sort of the entire, all these CEOs in the JSE, remember, we only look at the JSE, is about 3.8 million. Okay, rands. That's excluding their performance or variable pay. We accept the variable pay should be related to performance and their own performance and company performance. Let's just exclude that for the time being. When we look at globally, the median around all executives is $2.6 million. Okay. So are our executives underpaid or overpaid? I think the numbers tell you. If I exclude the US, for example, then that drops to about $1.8 million. So our executives really do a good job in South Africa, and I think actually in Africa, they're not here for the money.
Yeah.
They're here because they love South Africa, they're doing a hell of a lot more, but what more needs to be done? And I think that's what came out of our surveys, that there's so many other issues now. It's not the poor executives. We accept there are a lot of anomalies and a lot of them are probably overpaid, but there are equally as many who I think are underpaid. They're doing a fantastic job, but let's deal with some of the other issues.
Gerard, thank you so much for making the time to join us on Beyond Markets. Well, that does bring us to the end of the show. Remember, you can catch all these interviews at abndigital.com. You can also stay in the conversation by following me on Twitter at Nozi Pumbanja or hashtag Beyond Markets. Send us your ideas. Let us know what you want to see on the show. Well, that's it. Thank you for joining us. Good night.